Good morning. This is a voice note recorded this morning, cleaned up and turned into a speculative thesis. The topic is silver. The question is simple. What is going on? Last night, silver opened around 107 and just kept going. As of now, it's trading roughly 110. At the same time, when China reopened, Shanghai futures exploded higher as well, trading as high as roughly 123, with lows closer to 118 or 115 where we sit now, last we looked. The spread tells the story. After closing near $11, that spread reopened around 15, China over, and has been compressed back towards 10. That sequence matters. First, China buying led the market. Second, as the spread contracted, China kept buying, dragging the US futures prices higher. Those are the facts of what happened overnight, and absent a regime change, those dynamics likely continue. So the real question isn't what happened. The real question is, why is it happening? Now, there are two dominant explanations floating around, depending on who you enjoy blaming more. Both cannot be winning. One view, represented well by George Will, or a reasonable facsimile of him, is that JP Morgan is blowing out. The other view, pushed by some mining professionals and a camp we ourselves once leaned in towards, we still lean into it actually, is that China is getting squeezed. Now, at face value, those theories oppose each other. One side's pain should be the other side's gain. We'd offer a third explanation, a dialectic, if you will. Both sides are getting squeezed, but it's not an intentional squeeze. This is defensive behavior. This is the protection of nearby natural resources. The United States is defending access to Latin American silver. China is trying to defend its supply chains into Latin America. When that happens, you don't get a clean winner. You get multiple losers, and the only winner at the party that can stay standing through violent price action is the one that wins. So we ask the proper question: who benefits and who suffers? Cui bono, cui malo? At the corporate level, the damage is obvious. Chinese and Indian solar industries are getting crushed. Their cost structures are exploding, their margins are being compressed, and they export a massive amount of solar output into Europe. From an industrial standpoint, this price action is brutal. We'll attach charts to make that clear. Now, Chris Marcus and I have talked about this issue before, but he raised what is actually the central point. For years, people assumed that investment demand would front-run industrial demand. Chris argued 2 weeks ago that the opposite is already happening. Industrial buyers are front-running investment demand to secure metal. Now, others have said this, but they have said it like it could happen. Chris said it is happening. We agree with him. Industrial users are scrambling now because future supply chains in the East look compromised, while supply chains in the West are being hardened. This brings us back to the who benefits and who suffers point. In China, industry suffers. In the US, banks suffer because they are the most important part of the industry here. Let's be blunt. JP Morgan is not making money on this move. If they are, it's only just begun on the trading side. They have been handling business as well. They're probably making money, just not from the actual trading itself. They flipped publicly positive. Other US bullion banks have followed, and it looks aligned, maybe coordinated. Maybe it's just survival instinct. Either way, when your business is disrupted like this, you are not winning. Now step up a level, zoom out a little bit. At the nation state level, China's industry is suffering and China is suffering. They cannot afford commodity inflation that handicaps their industrial base. The United States is not suffering. Put those facts together. Both industry and state are aligned and under pressure. In the US, that's in China. In the US, JP Morgan may be taking pain, but the government is not. Now add some context. We just removed Maduro from the board effectively. We are actively moving to sever Chinese influence in Latin America. That's a fact. Silver prices are screaming higher. There's been barely a whisper from the US government. That silence matters. Donald Trump's wife, Melania, was wearing silver on New Year's Eve. A little bit of paranoia, but that's how it works. That silence out of the government matters as well. If JP Morgan is losing money, they may not be. The government will absorb it. That's fine. This is not about a bank. This is about the United States versus China. This is what we call going over the top. In a hypothetical scenario, the US looks at China and says, you won't give us rare earths? Fine. We won't give you Latin American critical minerals and oil. We won't give you Venezuelan oil. By pushing China out of Latin America, we disrupt supply chains they spent decades quietly building, and really quietly building. And we do it in one hybrid strategic move. Then we say, you want all the silver? Well, we'll pay up for it, and you'll have to outrun us. Let's see who runs out of money first. And let's be honest, the US will not run out of money before China. We will issue the global reserve currency. Now layer everything else on top. Massive silver imports into BRICS nations, China nationals trying and failing to quietly extract Latin American silver, COMEX open interest being cooked down relentlessly. We noted that this weekend. Put it all together, and what you see looks like weaponization. Silver becomes the tip of the spear. Latin America becomes the battlefield. And yes, again, JP Morgan may be suffering, but China is definitely suffering. Because when you strip away the intent and look at the outcomes, China is importing commodity inflation. They are importing business stagflation through silver and other industries. And here's the historical irony. China has unfinished business with silver going back to the 1800s. And isn't it interesting that they try to resolve that history, that this is happening now? This is a weaponization of Latin America, and silver is the cleanest canary in that coal mine. So we leave you with this. China is not squeezing JP Morgan, at least not intentionally. JP Morgan is not squeezing China, at least not intentionally. Everyone is retreating to their corner. Everyone is hoarding supply. Everyone is acting in self-interest. And in doing so, the US may be negotiating rare earths by negotiating silver, copper, and oil. That's speculation. It's just opinion. I could be wrong, but it's worth thinking about. Because the right question is not what makes us feel good. The right question is always who benefits and who suffers. Good morning. 10-year yields are down 2. The dollar is down 20. S&P 500 is up 6. The NASDAQ is up 121. The VIX is up 69. Stocks up, vol up. Gold is up $95 at $5,083, having broken through $5,000 last night. Silver is trading 110, up $6.76. That's 6.54% overnight. Shanghai silver is trading 118 with a high of, I believe, 123. Shanghai gold is trading 52.30. That's futures with a high of, I think 52.40. The Shanghai COMEX silver spread is about $8. Copper is up 6.5 cents. WTI is down 42. Natural gas is up 2. Bitcoin is up 1,100. Finally, Ethereum is up 83. Palladium is up 107. Platinum is up 81. Gold, silver is down 220. That's 4.5%. Trading 46 now. And grains are mixed. To the actual stories. This weekend we put out a post called HeartNet Ghosts of 1976 Appear. HeartNet frames 2026, although he doesn't call it this, as a ghost of 1976 setup. Fiscal excess plus rising intervention risks a second inflation wave. His trade is rotate, don't retreat. Stay in equities, but shift from mega cap to small mid cap and emerging markets. Bonds remain suspect until the 30-year breaks 5.5%. I'm sorry, 5.1%. And gold stays the core regime change. The next story we put out, which frankly was a great report, this piece explains how macro desks actually think. Bank reports are signals, they're not gospel. When macro traders finally justify and join a trade, it often confirms momentum rather than marks a top. Today, that convergence is clear. Across growth, policy, and geopolitical risk, gold has become the hedge of choice. Essentially, if you're worried about the bond market weakening, you buy gold. If you're worried about the bond market strengthening, well, then you're looking at a recession and you buy gold. That's what's going on in the gold market now. Other news, Germany to the U.S., we want our gold back too. The U.S. critical mineral stockpile bill for $2.5 billion is introduced. Silver, our targets of 100 and 144 are on target, or are on path, let's say. And recap, silver trades over 103, but that's now left in the dust. The chat's been very lively. Unfortunately, because we tried to do something right for people that were in the chat, we upgraded, we gave everyone 30 days free that was in the chat last week. And what ended up happening was the founders ended up losing their founders level, and it got knocked down the premium. We're talking to Substack today on that, and we'll take care of that for everyone. We'll make it worth your while. Data on deck, Fed decision this week. Please buy new mugs. We have normal size mugs now. You don't have to put your herbs in them anymore, or your cereal, and sweatshirts in addition to our hats, and support independent media. I'm not going to do the charts today. I think it's pretty self-evident. I will say one thing, and hopefully this is going to be helpful. You have two markets. You have China's, let's go with it daily. Well, they filled the gap there. Look at that. You bastards. All right, well, let's go with this. No, the gap isn't filled. It can't be filled. All right. China has a gap on the 4-hour. U.S. silver or COMEX silver and options and LBMA silver doesn't. Now, there's really not much to take away from this beyond everything we've discussed, except this one thing. When a market gaps, that's a sign of disorder. We're not gapping. They are. Does that mean China is melting down? No. But it means that China is the buyer at the margin, not the U.S. China is the buyer at the margin. Are they doing it to run in JP Morgan? Who the hell knows? I'll tell you what they are doing now. They're buying it, and they're spending real money on real silver. We'll have some more stuff out today. I'm Vince. Have a great day.